So the plus side for the U.S. of this development is that the momentum will still run on American rails. With the H20's return, Nvidia, it remains the backbone of Chinese AI, not just through hardware, but through CUDA software too, which we talked about. It launched developers into Nvidia's ecosystem. The downside, though, is that Chinese labs are getting for the U.S. of this development is that the momentum will still run on American rails. The latest breakout challenger return Nvidia, it remains the backbone of Chinese AI. Models can be scaled through hardware, but through CUDA software too, which we talked about. It locks developers into Nvidia's ecosystem. They've already been gaining ground. The downside, though, is that Chinese labs are getting very good at doing more with less. DeepSeek's original open source model, and now the latest breakout challenger, Kimi K2, they have proved that models can be scaled and optimized on the next non-Chinese open source model on the leaderboard. The export ban, they've already been gaining ground on Chinese models. Take a look at the model standard in open source. It has fallen way down. Kimi 2, an open source model from now the hardware story may be shifting again. Nvidia is preparing the B30. This is another export compliant chip just for China. Chinese shipments expected as early as this quarter. AMD is sampling a China legal version of its once the gold standard in open source. The net effect, guys, is that instead of starving China's AI push, now the hardware story may be shifting again. Nvidia is preparing the B30. This is another export compliant chip just for China, what policymakers expected as early as this quarter. David Sachs intended to do, but is sampling a China legal version of its extremely competitive leg of the AI race, where it's not about slowing anyone down, but about who can innovate and who policy is creating a parallel hardware channel to reflect that shift, the NASDAQ, and maybe hitting fresh record highs, but the policymakers like index, it is quietly outperforming this year. The K-Web basket that includes Alibaba, extremely competitive leg of the AI race, where it's not about slowing anyone down, but about who can innovate. And longer term, guys, there is another trade-off. The more China gets access to a chip shift, the less pressure there is to use and even develop. But the Chinese tech slow their index, it is quietly outperforming this year. The K-Web basket that includes Alibaba, Baidu, Tencent, one major caveat, though, none of this is guaranteed just this morning versus the top Republican who chairs the longer China committee. There is another trade-off to the Commerce Department objecting to the resumption of H20 shipments. Even develop its own. So this dynamic can change at any time, and so can the trade-offs. That is the plus side for the U.S. of this development is that the momentum will still run on American Republican who chairs with the H20's return. Nvidia, it remains the backbone of Chinese AI, the Commerce Department through objecting to the resumption of H20 shipments, which we talked about. Reminder that this dynamic can change at any time. The downside, though, is that Chinese labs, they're getting very good at doing more with less. DeepSeek's original.
Despite the rapid rally's indications of overheating, Nvidia traders continue to find reasons to purchase the stock. For the first time since June 2024, when the stock fell more than 20% over the next 6 weeks, the chipmaker's 14-day relative strength index hit 80 on Friday. A number above 70 indicates to some experts that buying is reaching extraordinary levels. The momentum gauge measures the speed of a stock's recent price fluctuations. According to Jonathan Krinsky, chief market technician at BTIG, it's undoubtedly becoming overbought, but it doesn't necessarily signal a reversal is about to happen. It seems as though the once optimistic atmosphere has become almost euphoric. Since April, when concerns about a possible decline in AI investment were heightened by a widespread sell-off brought on by tariffs, Nvidia, the market leader for chips used in AI computing, has seen a dramatic reversal. Since then, investors have returned to the stock, driving it up 84% in less than 4 months, and the company's largest clients have kept contributing additional funds to the development of AI services. News that Nvidia intends to resume selling some AI chips in China with U.S. government approval has been the driving force behind the most recent leg of the surge. According to Bloomberg intelligence analyst Kunjan Sobhani, the policy reversal from President Donald Trump's administration may aid in the recovery of a significant portion of the $15 billion in Nvidia's fiscal 2026 data center income that had been threatened by U.S. chip export limits. Trump also said this week that he is committed to investing over $92 billion in energy and AI infrastructure, while Mark Zuckerberg, the CEO of Meta Platforms Inc., confirmed intentions to invest hundreds of billions of dollars in data centers. Based on supply chain statistics provided by Bloomberg, the parent company of Facebook is Nvidia's second-largest customer, after Microsoft Corp. Nvidia's market worth has increased by around $1.9 trillion since its April low, surpassing Meta's market capitalization alone. The company is on course for its 8th consecutive week of advances. At about $4.2 trillion, Nvidia has surpassed second-ranked Microsoft by roughly $400 billion to regain its position as the most valuable corporation in the world. James Abade, managing director and head of basic strategies at Horizon Investments, stated that there is undoubtedly momentum behind it. Buyers appear to swarm in whenever we receive small, encouraging news, giving the stock another boost. Nevertheless, Abbat sold some Nvidia stock using the advance. Along with the growing value, he expressed concern that investors may be underestimating the AI industry's potential for future cyclicality. Up from a low of less than 20 in April, Nvidia is now valued at 34 times earnings anticipated over the next 12 months, which is still much less than the average of roughly 40 over the previous 5 years. The majority of Wall Street investors are still optimistic about Nvidia's prospects due to growing indications of demand for AI, including Taiwan Semiconductor Manufacturing Co.'s strong estimate on Thursday. 9 analysts rate the stock as neutral, while only one of the 79 analysts Bloomberg tracks has a sell rating for the business. In the upcoming weeks, investors will be closely monitoring big tech companies' earnings reports for clues regarding their capital expenditure strategies. Microsoft and Meta are expected to report on July 30th after Alphabet Inc. on July 23rd. More than 40% of Nvidia's sales comes from those 3 businesses and Amazon.com Inc. The company's results are expected in late August. Wave Capital Management senior strategist Reese Williams believes there is no reason to profit from Nvidia given all the indications that AI spending would continue. Nvidia needs to have a strong quarter and improve its outlook, but we anticipate that happening, Williams said, adding that the company has had a strong breakout. Strong data center growth is likely to continue for another year or two. President Trump first hailed the agreement as a historic trade breakthrough in May, but as of mid-July, U.S. Commerce Department officials continue to refuse certification for shipments of Nvidia AI chips to the United Arab Emirates. New security guarantees now stand in the way of what once appeared to be a done agreement. The main source of the delay is G42, an AI company based in Abu Dhabi that is expected to receive about 20% of the chips. Commerce executives are concerned that China may indirectly have access to Nvidia's most cutting-edge semiconductors through G42's past links. In order to allay those worries, G42 has committed to building corresponding data centers in the United States for each of its UAE-based operations and to divesting from Chinese partners such as Huawei. The Stargate UAE data center development, a collaborative initiative supported by G42, OpenAI, Oracle, Nvidia, SoftBank, and Cisco, has been placed on hold due to the security stalemate. Originally planned for 2026, the first 200-megawatt cluster could now be delayed if chip permits are not received quickly. Negotiations are still ongoing, according to both parties, but with stricter scrutiny and updated terms. The Commerce Department's license approvals, updated contract language restricting G42's direct chip access, and any public remarks from influential figures such as Nvidia CEO Jensen Huang, who has been advocating for the deal's continuation, will all be watched by investors and industry observers. New guidance regarding those approvals and the Stargate UAE project's future will follow. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. 2 of the most significant firms in the worldwide supply chain for AI chips are Nvidia and TSMC. The potent graphics processing units, GPUs, that power sophisticated AI models are designed by Nvidia and produced by Taiwan Semiconductor, utilizing its state-of-the-art production technology. Which business currently presents a stronger investment opportunity, even if both are essential to AI infrastructure? Let's dissect it by examining its financial results, difficulties, and prospects for expansion. With its products utilized extensively in data centers, gaming, and driverless cars, Nvidia is at the forefront of AI computing. Demand from cloud providers, businesses, and startups developing AI systems is still high, according to the company. Nvidia's data center revenues increased 73% year-over-year to $39.1 billion in the first quarter of fiscal 2026, demonstrating the robustness of this segment of the company. Customers are rapidly using its more recent Hopper 200 and Blackwell GPU platforms as they expand their AI infrastructure. Large cloud providers who rely on Nvidia GPUs for their AI workloads account for a significant portion of this demand. Significantly better performance is promised by the Blackwell architecture, and as demand for AI continues to rise, Nvidia's position should be further strengthened by future iterations like Blackwell Ultra and Vera Rubin. Export limits, however, present short-term difficulties for the business. Nvidia lost $2.5 billion in revenue in the first quarter as a result of new U.S. regulations that prevented it from selling its H20 processors to China. During the second quarter, Nvidia anticipates losing an additional $8 billion in H20 sales. Nvidia's growth is already being slowed by these limitations. The company's second quarter revenue prediction of $45 billion indicates a little sequential gain of 2%, which is far less than the double-digit growth it has reported over the last 9 quarters. Although Nvidia's long-term outlook remains optimistic, there is now a noticeable increase in short-term uncertainty. TSMC produces processors for leading tech firms such as Broadcom, Nvidia, and Advanced Micro Devices. Taiwan Semiconductor, which is renowned for its sophisticated production skills, has already begun producing 3nm and will shortly begin producing 2nm. Its size enables it to better manage the growing demand for AI chips than the majority of its rivals. Taiwan Semiconductor Manufacturing reported a 61% increase in earnings and a 39% increase in revenues in the second quarter of 2025. Sales of its 3nm and 5nm chips made up almost 60% of the total. Revenues from AI are predicted to treble in 2025 after tripling in 2024. Given that AI is probably going to be a long-term driver, TSMC appears to have a bright future. Taiwan Semiconductor increased its revenue growth projection for the full year 2025 from the previously projected mined 20% to 30% due to the robust demand for its 3nm and 5nm chips. TSMC anticipates revenues for the third quarter to be between $31.8 and $33 billion, requiring a 6%-10% sequential rise. To stay ahead, Taiwan Semiconductor is likewise making significant investments. In 2025, it anticipates spending up to $42 billion primarily on innovative manufacturing. Its dedication to maintaining its leadership in the development of advanced chips is demonstrated by this increase from $29.8 billion in 2024. According to the consensus estimate, Nvidia's EPS is expected to increase by 32.1% in fiscal 2027 and 42.1% in fiscal 2026. Earnings projections have increased during the last 7 days, indicating high confidence. Strong future growth is also indicated by the consensus estimate for Taiwan Semiconductor's earnings. EPS is anticipated to increase by 15.2% in 2026 and 34.7% in 2025. Over the past 30 days, TSMC's EPS estimate trend has been increasing. Although there has been significant market volatility in 2025 as a result of macro uncertainty and geopolitical stress, shares of Nvidia and Taiwan Semiconductor have done well thus far. Taiwan Semiconductor stock has jumped 24.1% so far this year, while Nvidia's has increased 28.9%. Taiwan Semiconductor trades at a more fair level in terms of value. It has a price-to-earnings, PE, multiple of 23.93x, which is significantly less than Nvidia's 35.57x. This implies that TSM provides higher value in relation to its potential for growth. Nvidia has a strong product roadmap and is still at the forefront of AI chip creation, but it still confronts immediate challenges, particularly from export limitations that prevent it from accessing the enormous Chinese market. Additionally, its stock is more costly, which reduces the upside potential in the event that growth slows. Meanwhile, Taiwan Semiconductor is at the heart of the supply chain for AI chips due to its lower cost and lower geopolitical risk. Growing demand for AI and large investments in emerging technology support strong growth prospects. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
What is the state of negotiations right now between the US and China? There's been talk of maybe a grand deal, given that this move to ease export restrictions on some of these chips, which was unexpected, has been pushed through by the Trump administration. Where do things stand? How likely is it that we actually get a deal between these two nations?
Well, it certainly was looking much more promising recently, right? You had a softening in tone from the Trump administration. We even had Bessent coming out and saying, well, markets shouldn't even be that obsessed about the tariff deadline, which will be, or the deadline to reach a deal, which is next month, sort of walking back any fears that if a deadline is passed, for example, or extended, that they shouldn't be trading as they have been, really, on any negative sentiment. So there were
kind of more improvements in the relationship. There's also a sign that Trump wants to start he wants to aim for a summit with the Chinese leader by the end of this year. In order to do that, there needs to be more moves like the softening of Nvidia's chip exports, because those controls had been in place for a while. They're a bipartisan policy. They were also under the Biden administration. And lifting that is really a positive sign, right, to the Chinese government. What we could see kind of in the next little bit is potentially more softening on that front, and potentially, the Nvidia chips and this particular chips that were exported to China, there could be more on that front. It's just one of many export controls that are in place and many options that the U.S. government has to sort of soften things. But there are two things that happened recently in the news that might escalate the situation once more. Wells Fargo, of course, one of their employees was stopped in China from exiting the country, and so that company is now advising others to not travel to China. In fact, is cutting off people from traveling, employees from traveling to that country to prevent that from happening to other employees. So, of course, that is a major issue there. And we could see that potentially flaring up. And the Chinese have also said, this is also fairly recently crossing the wire, accusing foreign agents of taking critical, like rare earths out of China and smuggling them. So in other words, hiding them in water bottles and mosaic tiles, which is something that, of course, right now they didn't name a specific country, but has risks kind of escalating in a very delicate situation right now between the two countries.